In this video, traders, let's look at why do brokers not allow you to trade certain shares. Stay tuned. Hey guys, warm welcome to you. Alright, so loads of stuff going on at the moment with GameStop, with AMC, with all sorts of stocks that have literally, if you've not even seen what's been going on with these things, where have you been? These have kind of gone crazy. And there's a story, a brief story, I don't want to go off track here, is that there's a lot of people on a web forum called Reddit who've got together Wall Street bets, similar to kind of ages ago, guys, the bulletin boards, and they've decided to buy GameStop because they've noticed that hedge funds are over 100% short. I did a video on this and I kind of looked and saw 140% short. I was like, wow, I wonder what it was beforehand. Actually, I found out that it was plus 100. So they were like, okay, these guys have got a cover. There could be some pain into it. And I've got some comments about that. There's another video, but I want to talk specifically about this video, why the brokers not allowed to trade certain shares. Now, what happened is a lot of brokers restricted buying in these specific shares for a period of time, and it went chaos. It was like, hey, you're changing the rules, you're doing this, you're doing that, you're stopping us trading. And I get it. Like, I get why people are frustrated. They feel like it's them versus you. They feel like it's that scenario, like, or us versus them, or however you want to put it. And they felt like, hey, why can't I buy them? You're changing the rules, la la la. And I don't know the full story. Nobody knows the full story why this is happening, but I just kind of wanted to put my explanation forward as to why a broker might do this. Now, the cynic would say, hey, it's the big funds who are in charge of capital, who are in charge of order flow, who are putting pressure on brokers to stop this. I don't think that's true. There will be a few funds that are short GameStop. There'll be a few funds potentially that get hurt by this, but the majority of big hedge funds are not going to be messing around shorting GameStop. It's too much of a small market for them. It's not worth it. If you look at the market cap when the short was there, if it goes bust, they're going to make hardly anything. So the taking down big hedge funds is just not happening. It's just not happening. They're not involved in it. They're not interested in it. There might be some smaller ones, kind of got small amount under assets under management, who have over leveraged themselves and might get caught in it. But that's that. So I don't feel like there's no damage to these bigger firms out there. If anything, these bigger firms are making loads of money because they'll be trading intraday. Their algos will be feeding off the retail order flow. They love retail order flow because the average person who press buy on RobinHood, it gets routed through. RobinHood fill you, but it goes through to all sorts of other HFTs who skim a bit off the top. They love the flow. There is no reason why they're going to stop this flow. They want as much hype over stocks as possible, and they want retail traders in, because retail traders don't care about slippage. Retail traders aren't bothered about losing a few cents here and then, especially when it's volatile. And so that's just money in their pocket, money in their pocket, money in their pocket, money in their pocket. Citadel, all these guys are making a killing from making a market on this stuff. They don't care whether it goes up or down, left, right, or whatever. They just want flow. So they are making a lot of money, and there are hedge funds making a lot of money as well from the flow, from maybe a subsequent short, who knows, from riding it intraday. Maybe there's a few funds who are stuck short. Maybe the whole thesis behind it is valid and what have you. But hey, the reason, going back to the point of the video, why do they not allow you to trade certain shares? I don't think, and again, I don't know this, guys, who knows? I don't think that it's pressure from the top. I think it's more a case of, we have to put up some margin. We have a counterparty who deals with this, and we have to have liquidity on hand, if you like. We have to pay them liquidity. And when you have so many traders who are in one direction, all of a sudden, there'll be some of them who have traded on margin from a while ago. There's some of them who've just traded on cash, and they'll be saying, hey, hang on a second, we are excessively vulnerable to this. Because if something happened, we've got some margin requirements here that need to be filled. That's why they up the margin on stuff to protect themselves. It's just a case of, hey, the counterparty is now vulnerable. We need you to have some more asset. We need to put some more assets. We need to draw down your credit lines and put that under control to cover potential losses here, because there's a significant challenge. That's why a lot of them won't allow you to short, because they don't want to be, if things suddenly gaps up massively overnight, it's going to rip some people's faces clean off and they're getting on the hook. Don't forget, you're trading with a broker, you're trading with a counterparty. Even though you're getting a fill and you're trading stock, you're still trading through multiple different parties to get that fill. And so I think it's purely a case of, let things calm down a bit, let's just make sure we're not in any trouble here with this, right, and then allow people to trade again. And the other thing is, guys, you know, there's a potential here that SEC steps in and goes, you know what, we're going to halt this, and we're going to halt it, and we're going to wait and see what's going on. We're going to halt the thing, everyone can calm down a little bit, and we're going to share what's relevant news. We're going to get rid of all the fluff, and because they'll think, you know, the trouble with the SEC, or there's not trouble with them, the thing with the SEC, guys, is they think that they don't want people trading on misinformation, okay? They don't mind, they don't mind you trading a volatile stock based on your own idea and stuff. What they don't want is misinformation driving a stock. That's what they're trying to stamp out. So if they believe there's been misinformation in a stock, they will halt that stock, and then when the stock is halted, they'll go, right, this is misinformation, let's have a statement from the company, blah, blah, blah. It will all be cleared up, then they'll open the stock again. And then who knows what happens then. So I'm not saying that this is misinformation, but if there has been any talk of that and they feel, you know, their job is to protect retail traders. And sometimes we know FCA, SEC overstep the mark in some ways, especially the FCA with kind of the ban on crypto. I think that's a bit too much. A lot of the leverage restrictions, ESMA, etc. But you know, ultimately that's what they're there for. They're there to protect the retail investor. And if they think that the retail investor has been hoodwinked into buying something that's not really what it says it's going to be and it's not transparent, that's when they'll step in. I don't think they'll step in just because there's a lot of hype around a stock. You know, there's a lot of stuff going on, like Tesla, a lot of hype in it. You know, they've been hype stocks for years, but there's a subtle difference between the two. So, like I say, who knows? I've not been following it as closely as you guys are well into this. I'm watching it now, obviously GME. I'm watching, you know, AMC, all this kind of stuff. You know, personally, I don't think that it's a concerted effort to stop retail traders buying. Again, retail traders, even if there's a couple of million of them, that money is relatively small, guys, compared to some of the big boys out there. We're talking order of magnitude, massive difference. Can it move stuff? Yes. Has it moved stuff before? Yes. You know, is there a constant flow of it? No. Once everyone's in, there's kind of rarely another 100 grand coming behind it, another 100 grand, another 100 grand. So I could be wrong. Again, I don't know this, but I don't think it's a concerted effort to stop retail traders buying. I think it's a liquidity problem. I think it's just to protect themselves. I think it's just to calm things down. I don't think there's anything more sinister than that. Maybe after I post this video, guys, there'll be a big news thing that says I'm completely wrong, and I'm prepared. That's fine. But that's my hunch. But I think also you've got to watch out, because the SEC may well go, hey, you know what? We don't want people to buy this because it's misinformation. And if that happens, who knows what's going to happen to the stocks after that. But and again, guys, these stocks could just rip up and up and up and up and up for a long, long time before they come down again. You just don't know whether the key takeaway is that anything can happen in the market. As long as you're playing the game and you're understanding the risks and you keep your risk managed to some extent, whether you're trading with money you're prepared to lose, whether you're using some kind of risk management controls, fine. You understand the risks, you play the game. Take care, guys. See you next one. Bye-bye.